Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 3rd of July, 2025. This will be our last video of the week. Tomorrow is the July 4th holiday in the US, and as a result, the US markets will be closed. Sure, Canadian canola will be still open, but we feel that it's probably going to be a pretty light trading day for canola, and it will be a good opportunity to take another break here. Just to talk a little bit about YouTube here, we realized that only 68% of the people who watch our videos are subscribed to this channel. We would like to change the subscribed percentage and increase that. So if you wouldn't mind, just hit that subscribe button and subscribe to our YouTube channel to get all of the videos into your feed. Click the like button or the bell icon in order to get alerted to those. Make sure you like and comment on these videos as well. It helps us out to help promote Canadian agriculture markets, which is not a topic that a lot of people are covering on. So let's get right into what happened in markets today. All right, canola was down $15 a ton. It was up 25 yesterday. It settled today at 719.50. Minneapolis wheat was down slightly at 666 and 3/4. Kansas wheat was down 6 1/4 to 536. Chicago wheat down 7 1/4 to 556 and 3/4. Soybeans were up $1.25 or $1.25 at 10.49 1/4. Bean oil was down slightly at 54.7 cents per pound. Corn up 2 1/4 at 431 1/2. The Canadian dollar was up 15 basis points at 73.72. So we're getting back to the 74 range there on the Canadian dollar. Live cattle, August live cattle unchanged, 214.05. Feeder cattle up about 47 points or 47 cents a hundredweight at 309.50. I'm going to have to take a look at that live cattle one there. Perhaps we are getting close to the time when we need to flip over to the September contract. So before we move on, we just want to talk a little bit about something that's happening later tonight. President Trump is scheduled to speak at the Iowa State Fair tonight. I think there's a lot of grain traders who are placing their bets on what he might announce during the speech. Those who are bulls will argue that Trump would not head to the heart of America to start the Independence Day celebration if he was not going to announce something substantial. That maybe take the form of a nationwide ethanol blending standard or something of that sort. But I think the consensus is that he's going to announce something that is beneficial to corn. Now, what that's done to corn in the last couple of days, as it has rallied it off of its kind of lows down near 416, and at one point today we saw it reach above 442. Pretty big gains we've seen in the last couple of days over corn. I think that is partially because there's a huge short position in corn, but also because there is some optimism about what President Trump is going to say today. And we really could use some strength in corn. It has just been hammered recently by large acres, 95.2 million acres, and yields that some commentators are calling 185 plus. So 185, 190. There's lots of people who would argue with that, of course. But I would say the sentiment is big yields and big acres. So we need some kind of shot in the arm in order to kind of reverse the trend on this corn market. We've also seen some strength out of the bean market this week, and beans have climbed as well. They were just a few days ago, they were down near 1010, have rallied back to 1049 is where they closed. They came up to about 1058 early in trade today. Pretty substantial pullback here. As you can see, it is still definitely trading kind of inside of this channel, which, I'd like to see it break out of this channel in order to give us some directional bias. The nice thing is that on the upside of this channel, there is kind of a double top here or two highs that come into play. The support here as well looks to have held for the last 3 touches as well. So we're definitely range bound in trade. You can see all these moving averages have converged as well, which does signal that there is some neutrality in this market and not a lot of directional bias. We still have a lot of weather to go in North America for the soybean crop, but again, not a lot of problem areas as far as weather goes. Let's get into wheat here. Again, we've seen U.S. markets kind of climb over the last couple of days this wheat market took a bit of a breather today. I'm showing the Chicago chart here, but the Kansas chart looks very similar. Again, just a couple of really good days of gains. Broke back above the 20-day moving average. Although with this wheat market, it's not necessarily the case that a break of the 20-day looks to change market direction. In fact, it looks like that 200-day on the resistance side held pretty strongly as we tested that in June before the big pullback. So we could see another move up to the 200-day. That would make a lower high, though, so wouldn't necessarily signal a bullish move just yet. Minneapolis wheat is behaving a little bit better. I think in our weekly report, actually, which we will release tomorrow, we do kind of showcase some of the problems in the milling wheat area, particularly in Europe and things like that, Northern Europe, that may actually help bolster the spring wheat market. Maybe here in Canada as well from an export standpoint, but that might actually filter into the futures market. We are seeing the Minneapolis wheat futures behave a little bit more favorably than we are the winter wheat classes. Of course, winter wheat is currently getting harvest, and we should be past the 50% mark during the next crop condition ratings report. I can't recall if that's going to be delayed next week because of the holiday this week, but it's possible that we'll see that Monday or Tuesday. I can't remember off the top of my head right now. All right, moving on to canola here in Canada. Interesting couple of days. We saw the same kind of strength in canola, or at least the same directional strength in canola with 2 up days through Tuesday and Wednesday. Today, that brought actually canola back to about the 740 level on November. That's that makes back about 75 or 80% of the gain or the losses that we saw in that recent pullback. That was one of the steepest and longest pullbacks that we've seen in canola, since the springtime. So, I think the canola market is trying to find where it belongs here. We've got some rains in Canada that have been beneficial. But overall, I think the sentiment is still relatively strong. There was some support there at the 100-day moving average. Didn't make a new low. That's good. So if we can push this up to a new high, that would be a continued bullish signal. But I think there might be some pretty strong resistance as we get to that 750 level, as that was a pretty advantageous level for farmers. And there were some target prices that were getting picked off there. I think basis levels have improved a little bit since then. So you may actually get some of those target levels may actually be getting hit prior to the futures market making those same highs. So that may mean that we don't see a new high in canola. We are keeping an eye on that pretty closely here at Ireland Como Lafoy. So at any rate, that is what's happening. We did see a $15 pullback. So, about a little more than half of the gains that we saw yesterday did pull back today ahead of the July 4th weekend as well. Just a couple of other charts on canola here. There is some positive movement here in crush margins, and that's why we may be seeing some lift in the canola futures markets. Since the second week of June, we've seen some advancement. Of course, these crush margins are front month crush margins. So when we saw the market flip from the July futures contract to the November as the front month, that would have had an impact as well. But still, if they're hedging off of the November now, we're talking about crush margins that are in the $130. This is board crush margins, by the way, not necessarily net cash crush margins. But it still gives us good directional bias on that. We saw some highs a couple of times over the springtime or late winter, early spring that brought it close to $200 a ton. Lots of hedging was done then, I believe. And I think there's probably some happening now in this $130 area, which is bolstering some of the support for canola because now we've seen $40 crush margins, and crushers don't want to work under those kind of conditions. I think that would probably be producing a loss in the cash market if they were hedging, $40 or $50 board crush margins. So just something to be aware of. Also, the forward curve in canola is interesting. We are seeing some carries in the canola market, some pretty big carries in the canola market. What that means is that the market is paying to store. So generally speaking, in a wildly bullish market, we see an inverse where the front month contract is valued at a higher price than the further out contracts, and that is just not happening at this point in time. So it feels like the market is bullish because of the price action, but The forward curve is not necessarily giving us that same signal, and it is signaling that the market is willing to pay for farmers to store. So that's something to consider. If you're looking to get a specific cash price, and I know a lot of folks don't need movement or cash flow in the fall. So if you do push your sale out into January or into March, maybe take some of those tax advantages and things like that. It is advantageous to do that for you on the futures market at this point. It is paying you to carry that crop. All right, some other inputs for the vegetable oil or the canola market. December soybean oil has also been up the last couple of days. It is still pretty high in the box as far as where we are at versus history recently. Even this market did not pull back to the 20-day moving average before finding some support and then rallying back. Same kind of pattern though, right? We've seen last couple of days of rally here. So it just feels like the US markets ahead of this 4th of July holiday decided that they wanted to buy these ag commodities in the last couple of weeks or during this week before the holiday here. Malaysian palm oil, even that has seen some of that same sort of thing. So, we're not seeing new highs or anything like that in palm oil, but as you can see, we've kind of been trending trending higher lows and some higher highs here as we move through, May and June and now into the start of July. So it is kind of trending, at least in the short term, in a bullish fashion after some weakness as a result of production and some demand loss because of high prices and things like that. So it is, palm oil has been recovering over the last couple of months. Euronext rapeseed is not so as lucky. I think the conditions there have improved over the last couple of weeks. And in our weekly report as well, tomorrow, we're going to talk a little bit about European weather and the GeoGlam crop monitoring system. So you want to subscribe to our premium stuff for that, go to canadianagmarkets.com/subscribe to do that. I'll put that in the show notes as well. Other than that, that's all we have for you today. Thank you for joining us. Make sure you hit that subscribe button on this YouTube channel and ring the bell if you want to get notified of our new videos. And like this video if you liked it, and we'll be back to see you next week.